Ladies and gentlemen, welcome to the show. Glad to have you guys here this Thursday. Thursday the 8th of February, 2024. Well, guess what? We got another bank starting to crumble. Well, I say crumble. It's not down, but there's problems. It says Wall Street worries banks aren't worried enough about commercial real estate as New York Community Bank Corp. Turmoil mounts. Just calling it NYCB. The stock of commercial real estate lender New York Community Bank Bancorp slid 22% Tuesday. It's now fallen 60% since it surprised Wall Street last week by slashing its dividend and reporting of net quarterly losses of $252 million. So this is a $116 billion bank that's stoking new concerns about the industry's vulnerability to office buildings and apartment complexes that are suddenly worth a lot less due to high interest rates and shifting work parameters or shifting work patterns. So here's a picture of Janet Yellen. It's something I notice about the political structure right now. There's an awful lot of, I'm telling you, really old people that are in positions of a lot of power. Even Chairman Powell himself is getting really old, you know. Situation the world's in right now. It's really incredible, but we got all these banks out there, you know, and they're getting in trouble. I think this is the beginning of part two of when the Silicon Valley bank crisis occurred. I think we're getting right on the edge of part two. So the second act of all this. So we got this New York bank of $116 billion. As far as bank sizes go, that's not quite as big as Silicon Valley Bank. I think Silicon Valley Bank was $200 billion. This is $116. So it's not quite as big. But how much derivatives exposure, I wonder, do they have? I'm just curious about that. Now, Moody's said that New York CB Bank, NYCB, is significant and unanticipated losses in its New York office and multifamily properties could create potential confidence sensitivity. The elevated use of market funding may limit the bank's financial flexibility in the current environment, the ratings agency added. NYCB did not immediately respond to Reuters' request for a comment. So I don't know, maybe some of you in my audience got money in this bank. Don't know, maybe. But what we're going to see is it's not altogether sure what's going to happen with this bank just yet. New York Community Bank Corp. Incorporated. Yeah, so we got another one starting to go down. But this might be the first of like stage 1, stage 2 in this banking crisis. And I'm expecting more. Now, I've been expecting this one, and I've been saying it for months, that perhaps it's going to come from the commercial real estate sector. Yeah, exactly. Hit the nail right on the head. Here we go. Now, you know, infiltration. Very subtle infiltration. Chinese hackers have been inside some critical networks for 5 years now. Well, they can be inside a critical network and you don't even know they're there. It's kind of like having mice inside the walls of your house chewing on your electrical wires. You can be living in there for years and not know there's a problem until all of a sudden one day your house burns down. says the United States urges companies and organizations to help root out the Chinese hacking group. Well, you know, this particular group is called Volt Typhoon. But I'll just tell you straight up front, if you spot one, there's probably a dozen. Because this is the whole thing about them being quietly hidden, you know, within the networks and stuff. It says a Chinese state-sponsored hacking group has been successfully infiltrating critical infrastructure systems in the United States, in some cases maintaining access to more than 5 years, according to federal investigators. So, where did I read about it here? The things that they're saying that they're infiltrating. It says the group has been able to hide for so long inside the U.S. networks by relying less on malware and more living off the land tactics, which involve harnessing legitimate software tools or hijacking valid accounts inside a company to conduct the infiltration. It says the group will also time their infiltration attempts to carefully avoid tipping off security measures. So, where did it say what kind of infrastructure they here? I read it here earlier. I'm looking for it. It was listed here, and it's scary. I'm sure I read it here earlier. Just exactly what infrastructure they're hacking into. Where in this article, though? Was it down here? It says Volt Typhoon's primary goal is to gain access to a powerful administration account inside a network. Once access is achieved, the hackers will exhibit little activity. See, this is the thing. How much of this is going on that we don't know about because there's little activity. They're not active. What they'll do is they'll subvert or make their way into a network or something. You don't know they're there. It's almost like a thief hiding inside your house, maybe in the back of the closet. He's hidden under some pillows or something. You're there all day long. He's been in the house all day long listening to you, but he hasn't moved or anything, and you don't know he's there. Well, this is the way they're inside these critical networks and stuff inside the United States. There's probably, if they've spotted one, there's probably dozens. Yeah, this is a serious problem. And this is just the networks that run in cyberspace. What about in the real world environment? Like real spies and stuff that you don't even know is there inside your country. Real splinter groups, etc., that you don't know they're there until they become active, like hidden cells. It's almost like cancer or something. You could have cancer and not know you have cancer, and then all of a sudden, boom, you go to the doctor and he says, well, you're beyond hope. Well, this is the way maybe with our country is we don't know just what's going on out there in the real world in our countries. Like here in Canada, too. Just don't know. Until it becomes active. Until something activates it. What could activate it? War. War is probably what it's waiting for. I mean, it's an awful lot cheaper. Instead of building all these war armaments and training armies and everything else, just to do a Trojan horse nowadays to a country. It's an awful lot cheaper. More effective way of bringing a nation down is by infiltration. And this could be, just like drones became more effective than tanks, infiltration could become more effective than armies. Anyway, let's move on. We got a lot to cover here in the financial markets today. You know, silver's done an awful big dipsy doodle. Shot to the upside. It touched about 2260 or something like that. It's just to shoot right up, and now it's shot right back down again. And now it's shooting right back up again. So it's got a lot of volatility today. We're looking at 2237 today. It's up 22 cents on the day so far, but it's still within that trading range. You know. Now gold today, gold is at 2030, and it's right in the middle of its trading range today, and it's down $3.20. The big news today in the markets is Bitcoin. Bitcoin has shot up. It's at 45,319 right now. And so we've seen a rise in the price of Bitcoin. So it's marching back up again. Ethereum's up too at 2452. And XRP is at 51 point. I get a kick out of XRP. It's always 50 something cents. 51.7 cents. So that's the usual. Kind of like a guy goes into a restaurant and he says, I'll have the usual. And they know exactly what he means. Well, the usual is 50 cents for XRP. Well, the usual. Anyway, moving on. Dow Jones Industrial Average today. She's down 65 points on the day so far at 38,611 for the Dow Jones. Okay, the markets now are waiting and they're watching and it all revolves around the bond markets, the Fed's rates on the bond, the overnight rate. And what's the Fed going to do? A quantitative tightening in the overnight rate. Are they going to raise rates, lower rates? No, they're not going to raise rates any longer. They've hit the ceiling. But when are they going to lower them? And just because they control the short end of the yield curve, what about the long end of the yield curve? What's it going to do? How are they going to continue to sell? And those rates around the 10%, the 10-year, I should say, treasuries, are extremely sensitive. Our economy is extremely sensitive to those rates around the 10-year because that's what debt's priced off of. So what's going to happen with all that? Taking a look now at crude oil, it's up $1.60 today at $75.46. Oh, you see, crude oil is going along there. What was that dip there? Oh, yeah, that's when it went down to negative $40. Can you imagine that? If you had that day when crude oil went to negative $40, if you had some sort of a big empty tank or something, you could have, they'd paid you to take the crude and fill your tank. And maybe you had, I don't know, a big ship or something. You could load her up, and then price goes back up. Boy, what a deal that would be. Anyway, it just shows you how they can manipulate the markets, that they could take it down to a negative price. Now, looking out here on the bonds, we're seeing that 10-year, and that's the one we watch the most, is at 4.15. It's up 5.8 basis points on the day. If there's no buyers, how do they keep that yield down on the 10-year? If they have trouble finding buyers of these bonds. I'm not a complete bond expert. But I do know how important the bond market is and how large it is. And even compared to equities, the bond market is I think it's like 10 times bigger. And it has so much of an impact on the financial system. And I'm going to tell you guys what, as far as I'm concerned, this whole thing, treasuries, is all one big scheme from its very foundation. U.S. 30-year, 4.36, and it's up 6 basis points today for the 30-year. That's priced off of this, and honestly, if the yields get too high, nobody can afford to borrow money. And on the other side of that coin, people will start to have a better return on their investment if the yields get really high. You know, we saw bond yields back during the Volcker when he was Fed chairman. I think they went up to 18% or something. I remember when I was a kid, you know. I remember it wasn't unusual just even in your savings account in the bank to get like 7% or something per year just on a savings account. And if you put your money in more into a little bit longer term and stuff, you could get like 10%, 12%, not uncommon. And a lot of people could live off of their capital. If you had, like, say, more than $250,000 back then, you know, you could easily live off your capital by collecting such a high rate of return on your money each year. Like, I'm talking back, you know, around 1980 or whatever, in the early 80s. You could make, like, you had $250,000, you could make like $15,000 or $20,000 a year interest and live off the interest on your money, is what I'm saying. And back then, $15,000 or $20,000, I mean, you could live like a king off of that back then. Nowadays, you couldn't. Do you realize that back then you could buy a brand new car for $2,800? Okay, so if you were making like $18,000 a year off your interest, and you could live off of that, heck, you could drive a new car every year. You could buy a new car every year outright. And you'd still have like $15,000 left over to live off of. And back then, food prices were so unbelievably cheap, you could go into the grocery store and for $20 or $30, you could fill 2 whole grocery carts full. Fill your whole car full of groceries. Everything was so cheap. Rent, you know, it wasn't uncommon for people to only pay $200 a month for rent back then and stuff, you know. So like $18,000 back then would be like making $150,000 a year now. Maybe better, you know. Anyway, listen, guys, thank you for listening to my show. Like and subscribe. We'll catch you guys in the next episode. Have a great afternoon. Bye-bye.